The S&P is on the verge of reversing the trend, about to put an end on this bear market, exactly as it did in 2002 before another 30% crash. So, will history repeat again? Is there another fake golden cross on the index? Well, in this video I will share some strategies and I will explain in details the technical key points you must watch from here in order to prepare yourself to whatever happens. My name is Nathan, welcome to the Finance Hydra channel. I hope you guys are going to enjoy this video. Let's start our technical analysis on the S&P index. First, in the daily chart, the trend is still clearly bullish because the S&P is still doing higher highs, higher lows, trading above the 21 exponential moving average, and it feels like the 40-50, this red line over here, is another key point for the index because yesterday, although we crashed yesterday, we found a support level at this red line over here at 40-50. So there is a crystal clear support level over here. Today we are reacting. This candlestick pattern over here has a name. It is called above the stomach candlestick pattern, which is a quite interesting pattern because according to Bukovsk's statistics, it is a bullish reversal pattern 66% of the time, and the best percentage meeting price target is of 61% when it is a bull market and when it does an upwards breakout. The above numbers are based on hundreds of perfect trades. So here it goes. We see some nice statistics regarding this pattern, and it seems the S&P still wants to be bullish. However, if we lose this key support level, if we lose the 21 EMA, maybe the S&P is going to completely frustrate this bullish thesis. Therefore, let's pay attention to these key points if we take a look at the weekly chart. In the weekly chart, we see that last week we did an upwards breakout from this descending channel. This is new, this is quite good, this is quite impressive, and it is another very strong bullish sign that the S&P is on the verge of reversing the trend. I mean, we have been inside this channel since January 2022, and right now, 1 year later, we are doing an upwards breakout after doing a higher bottom, a bottom higher than the previous bottom over here on October 2022. So yes, it looks like the S&P is on the verge of breaking this descending channel. I'm so sorry, we already broke this descending channel, but we are on the verge of breaking another bullish pivot point. If we do this, a bullish pivot point, then the S&P is going to do the first higher high, higher low since 2022 over here when we started this bear market, okay? We could not see any higher high, higher low in 2022 at any moment. So if we do that, great. The bullish bias will persist. Probably the S&P is going to reverse the bearish sentiment, putting an end on this bear market because we're going to trigger a bullish pivot point, a bullish reversal structure in the weekly chart. And this is quite bullish. This is a very powerful bullish scenario. However, there are some key points that we must watch from here because the situation is still not that good for the index. As far as I know, we are in a no man's land, right? Because we are trading between a key resistance at 4100 and a key support at 4050 over here. As far as I know, the index could do anything it wants over here in this area. As long as we don't see any crystal clear breakout to the upside or to the downside, nothing new is going to happen. Only a breakout of the 4050 or the 4100, we are going to see something new. Now, if we do a downwards breakout, I already told you guys, this could be an amazing bull trap for the index because probably we're going to see a false breakout from this descending channel. And here's why the situation is still quite dangerous. If we see a false breakout from this descending channel, and after retesting this resistance around 4100, the S&P might trigger a double top chart pattern, right? Do you guys can see? We might trigger a possible double top. Of course, this double top was not triggered yet. If it does, I believe the S&P will drop to much lower price levels. And if we analyze this chart 2023's chart and compare with the chart from 2002, we see that just like during the dot-com bubble over here, the S&P did a fake golden cross. We almost triggered a golden cross over here, just like we are doing right now at this moment. And well, guess what? We did trigger a double top chart pattern over here. This is why the situation is quite dangerous, because if we trigger a double top after doing a fake golden cross, the S&P will repeat the same pattern it did in 2002, a fake golden cross, a possible double top chart pattern over here, and in this scenario, the S&P would drop to much lower levels. In my humble opinion, we could retest the 61.8% Fibonacci's retracement around 3200, which is at the 61.8% Fibonacci's retracement. In addition, if we indeed do a false breakout from this descending channel, there is a very distant chance the S&P is going to lose the first retracement, the 38.2% again in the monthly chart, and this scenario only reinforces a bearish thesis to the downside. Of course, all of these scenarios were not materialized yet, and we have yet to see a crystal clear breakout from these support levels in the daily chart. Remember, my dear friends, trading is reactive, it is not predictive. We must wait for the right patterns to appear in order to react correctly. And of course, if you want to trade with me, consider joining the top 5%. To the top 5%, there is no such thing as bear market. We are doing insanely well. Only in January, we are up roughly 10% right now. So seriously, consider subscribing to my newsletters. Check the top 5% project. Now, back to the S&P. Neither of these bearish scenarios were materialized, and the S&P is still bullish, okay? The trend is still bullish. So let's say you are a bull. You don't believe you're gonna keep crashing from here. What's the key point you must watch? Well, 4100, because again, if we break the 4100, the S&P is going to frustrate the idea of a double top in the weekly chart and even a possible triple top in the daily chart over here, as evidenced by these red circles over here. So we gotta break 4100 as soon as possible. In this scenario, I believe the S&P is going to trigger an amazing bullish reversal structure, an amazing long-term reversal structure that could lead us to much higher levels, because the trend will just reverse. So right now we are in a critical situation. This is a decisive moment for the S&P. So obviously, I'm gonna keep you guys updated on this channel. If you're still watching this random Brazilian guy talking about the S&P for almost 9 minutes right now, so seriously, consider subscribing this channel. You probably like it, the content, am I right? Subscribe, click on the like button. I'm gonna keep you guys updated every single day on this channel. Thank you very much for your audience, my dear friends. Stay safe, farewell.